up, everybody? Another week, another dollar. Today is Sunday. Hope you're all enjoying your weekend as we get ready to kick off another tumultuous week here in financial markets. So without further ado, let's jump right into things. These are the top 5 things to know this week, starting off with number 1. We'll continue to focus on developments surrounding the coronavirus outbreak for further signs on how soon the economy will be able to reopen and resume some sort of normalcy, with some optimism that the virus is starting to peak across the country. 22 states, which account for almost 40% of U.S. gross domestic product, plan to reopen their economies in the next 7 to 10 days. So obviously there's a lot on the line here, with public health officials warning that reopening the economy could spark a second wave of infections. So if we do start seeing the number of cases start to spike across some of these states which are reopening early, then obviously it's going to be a worrying sign for markets, as this will determine if a reopening is successful, or if some of these states will have to shut down and reimpose some of those social restrictions and economic shutdowns which have dragged on activity. On to number 2. Speaking of the effects of the coronavirus outbreak, April's jobs report due on Friday will be the highlight on this week's economic calendar. Job losses are estimated at a whopping 21 million last month, while the unemployment rate is expected to spike from 4.4% to 16%. That would be the highest level since 1939. Now, with that being said, for anybody who's been following the weekly jobless claims numbers, we know that the unemployment situation is bleak and very, very worrying, obviously, with almost 30 million jobs lost in the past 6 weeks. So perhaps this number on Friday won't have the same shocking effect as we saw from the jobless claims numbers a few weeks ago, as the situation in the jobs market is almost fully priced into financial markets, at least as far as I'm concerned. On to number 3. We'll also have key services sector data on Tuesday, when the US ISM releases its non-manufacturing PMI at 10 a.m. Eastern Time. Recent data has indicated that it was the services sector which took the biggest hit from the economic shutdowns, as restaurants, retail stores, and the such have pretty much been closed for more than a month. Almost approaching 2 months now. So obviously we're expecting a sharp contraction. Be sure to head over to Investing.com's economic calendar to grab the forecast on that one. On to number 4. It's a big week for earnings as well. Basically, the one I'm looking at the most this week will be Disney, when it reports results after Tuesday's closing bell. The success of Disney Plus, obviously we saw it already with more than 50 million subscriptions in the first few months since it launched, will obviously be a sort of a boost to the company's revenue in the first few months of the year. However, with that being said, we'll be looking for further indications on how the COVID-19 crisis and the economic shutdowns have impacted Disney's business. We see the theme parks have been closed for a while. ESPN is showing almost no sports coverage with the lockdown of the major sports leagues. So obviously Disney's biggest problem around the closure is the theme parks, and any indications or comments from management on where they see the economy going in the months ahead will be in focus and will probably be the biggest mover for the stock post earnings. And finally, number 5, continuing with this week's big slate of earnings, we also get results from a few of the overhyped IPOs from last year. We get results from Uber, Lyft, Beyond Meat, Pinterest, as well as Peloton, one of the big winners from the coronavirus outbreak. We'll be looking to see if there's anything in that report to justify further gains. Beyond those names, we also get quarterly results from CVS, General Motors, Shopify, Roku, Shake Shack, PayPal, and Square. So there's a lot going on this week in terms of COVID-19 developments, the U.S. economic data, as well as earnings. So that's it for me. Stay safe, everybody. Most importantly, wash your hands so that we're able to get back into normalcy and resume business operations. May the trading gods be with you. Have a good one, everybody.